Hi everybody, Ken Heinz here, HFR President with the HFR 500 December 22 Performance Snapshot, also our year-end or full-year snapshot of hedge fund performance. After a brief period of risk-on behavior from the end of October through most of November, financial markets ended 2022 in much the way that they were the entire year, really dominated by volatility and risk-off investor behavior, ending the year with sharp equity market declines and continued rising interest rates. And as we know from the second half of the year, investors have also begun to position for a weakening economy or potentially an economic recession in 2023. Through this, hedge funds continued to generate strong outperformance of these equity market declines, led by strong gains in macro, and in the case of December and for the full year, fixed income based relative value strategies. We all know about the performance volatility that has been so pervasive in financial markets and particularly equity markets in 2022. But I think we looked at this slide in the previous video and it does a great job of really capturing how much hedge funds have outperformed that volatility. We're focused here on the overall composite of all strategies of the HFR 500, as well as specifically the macro strategy. And in both cases, for the overall composite and for macro, the outperformance over the NASDAQ for the full year 22 was the widest outperformance that we have ever seen since the inception of the index. In the case of the overall composite, that outperformance was around 3,000 basis points. And in the case of macro, as you can see here by the gray line, that was an astounding over 4,700 basis points of outperformance of the NASDAQ. Again, the largest outperformance that we've seen since inception of the indices. As I mentioned in the earlier slide, hedge funds exhibited strong outperformance of equity market declines in the month of December. But what's interesting is that there were some changes in the trends with regard to the drivers of that hedge fund outperformance in the month of December. You see the leading area of performance, actually fixed income based relative value strategy, the HFR 500 relative value index, gained 53 basis points for the month. And macro, as we've talked about a number of these videos over the last year, a gain of 42 basis points. Now those are relatively small gains, but obviously compared to the performance of equity markets, here we show it against the NASDAQ composite, decline of nearly 8.75%. And netting those two gains against the two higher beta strategy areas that declined for the month, the overall composite had a very modest decline of negative 38 basis points for the month. Going one level deeper into the hedge fund outperformance in the month of December, we can see that some of the sub-strategies that are driving this outperformance actually have changed from what we've seen in the prior months. Leading area of sub-strategy outperformance in December was actually fixed income sovereign, with that index gaining 3.15% for the month. We saw a gain of over 2% in the distress index, which has been strong in past months, so that's a continuing trend. Macro sub-strategy outperformance was actually not driven by the trend following CTAs or the currency or the commodity, which it had been at different points over the course of the year, but was actually driven by fundamental discretionary thematic managers. These gained about 1.7%, and the same for the HFR 500 currency index, about 1 2/3%. And finally, the last is the credit multi-strategies, which are in the HFR 500 relative value multi-strategy index, gaining 0.75%. Again, all of these gains in a month where equities declined sharply. We have here the NASDAQ down 8.75%. Taking a longer view of time and looking at the year as a whole, 2022, the trends have been pretty consistent. We've seen macro have a very strong year. We talked earlier about that 4,700 basis points of outperformance. You can see that here in this slide if you take the 14.8 and the 33. That's been a consistent trend throughout the year. Strong outperformance on the basis of short equities, short fixed income, long commodity, and long US dollar, and doing that at all of the right times. 14.82% for the HFR 500 macro index. Smaller gain for the HFR 500 relative value, but a gain nonetheless in a year where financial market volatility was very high. We had a historic breakdown in correlation between equities and bonds. And we see here a gain of 1% for the most interest rate sensitive area of the hedge fund industry. Overall for the year, the HFR 500 composite declined 3.2% for the full year. And that obviously with the two strategy areas which gained netting against the two higher beta areas, event-driven and equity hedge, which declined for the whole year. Finally, drilling one level deeper to the sub-strategy drivers of performance for the full year 2022. These, as I said earlier, in December, these shifted a little bit. For the full year, they're pretty consistently the same areas of sub-strategy performance. The leading area of sub-strategy being the HFR 500 macro commodity, fundamental commodity managers. The HFR 500 macro systematic diversified gained about 16.5%. Very similar to that, the HFR 500 trend following index gained over 15% for the year. The HFR 500 relative value volatility index, which is very similar to macro, but it's primarily options trading managers that trade volatility as an asset class. That area gained 11.3%. And the fifth area of strategy outperformance for the full year, the HFR 500 energy basic materials, which obviously has a lot of the same exposures as the macro commodity index. The macro commodity is actually trading futures contracts or cash commodities, whereas energy basic materials investing in the companies that are engaging in the activities of exploration and production, things like this. And again, all of those sub-strategy areas well ahead of the sharp decline for U.S. equities. Again, here we show NASDAQ composite down 33.1%. There's a lot of great material in the Investable HFR 500 on HFR's website. So please visit the website, and when you go there, please click on the Investor Guidebook. You can access it directly from the website. You can save it. There's a lot of great information on how the HFR 500 is really a solution to common benchmarking challenges that institutions face. We've gotten a lot of interest in this and taken a lot of calls and questions from this guidebook. So please review that and reach out to me if you have any question. If you're watching this video, you know that we have regular performance updates that we host on YouTube. Please continue to watch those, and if you would like to subscribe to the channel, that's great. And certainly let us know if there are questions that you have or things that we can discuss in this video that would be more helpful and interesting to hear more about. Please feel free to do that. Any questions? Also, if you'd like to set up a call with myself or other team members here at HFR, you can email me, Ken Heinz, or send an email to hfr500@hfr.com or indices@hfr.com, and we look forward to speaking with you. Have a great new year, and we look forward to speaking with you next month.